Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
We got through basically the big event, which was just before we left. We talked about how war reprices everything or changes everything or what have you. Luckily, we had 3 options that I wrote about, and 2 of them were bullish. One was bearish. The one that was bearish obviously did not materialize. June 23rd, we gapped down. There was a truce between Iran and Israel. The bunker bombing display, we'll call it that, was basically the end for now. So who knows what will happen. But long story short, the market rejoiced. We had those bullish options, bets of melt up into meltdown, but obviously macro event risk can interrupt the bullish flows. When we had the truce, one of the 3, truce, true regime change, or troops, and luckily we had the truce. So we're basically in this kind of melt up feel. People are a little nervous about it, but as we said last time, this is kind of the MO for the market. And as I remind clients, you don't short all-time highs or buy all-time lows. You wait for a macro trigger and or a pattern and or bearish flows selling underneath the surface, and so far we have not seen it. Now probably we come to you this Wednesday afternoon and it'll start right now because we're but as of this writing, we definitely have had a backdrop of more, including the OBBB, big beautiful big bad bill, however you want to put it, but basically it passed, and that creates this backdrop of all gas, no brakes. And so this fiscal stimulus combined with geopolitical de-escalation combined with seasonally bullish flows. I mean, when we talked about this, when is June bearish? When is July also in NASDAQ bearish before the 14th? It isn't, seasonally speaking. Last year, we actually had July 19th cap it, and then we rolled over, but that was again a macro trigger. It was the yen carry trade unwind. Yields in Japan are definitely spiking higher. US yields are stable. The dollar is down a good 11% from its peak, but it's in an area of potential support. I would also contend bounce before the trounce. But for right now, this de-dollarization combined with fiscal, combined with bullish flows, et cetera, and Trump getting his bill passed on July 4th has basically been an all clear for traders and investors alike.
You can kind of almost see this sort of less and less abrupt flinch every time the word tariff is mentioned, and we just keep shrugging it off. And then in the meantime, of course, we are not going to go an episode without talking about AI. We'll guarantee you that, because of course we see the market being led by MAG, by the big names that we know all too well. And when you look at some of the leveraged AUM growth, so you and I talk about synthetic gamma and real gamma from options, from dealers being long options or short options, and we see the levered AUM, so the SOXLs, the MSTXs, MSTUs, these products that are sort of 2-time, 3-time levered, we are now at all-time highs again. So we saw that drawdown in April to lower levels, but still significantly higher than anywhere we've been in the last 4 or 5 years. So it was a little bit of a drawdown. Now we have come all the way back up. People retail continues to be interested in these products, and that contributes to that upward synthetic gamma, because when we have consistent moves, especially larger moves, these sort of swap products have to basically reposition. We call that rebalancing. So they have to buy into big rallies. They have to sell into big sell-offs, which absolutely contributed to the sell-off that we saw. So this is a two-edged sword. This works both ways. But in the last couple of months, it's just really been one way in particular, and it's contributing to that consistent bid. Now, on top of that, we have our usual suspects in the vol targeting space. You've talked about Nomura and some of your notes to members and some of your public notes, which everyone should read. If you are not reading Samantha's Substack, you are in the dark. So fantastic points that you're making. You talked about this a little bit, how there is this sort of consistent bid in the market from these systematic products, right? So we always talk about how there's retail, there's institutional, and then there's this whole kind of murky world living in the weeds of these systematic funds that at the moment need to buy. When the market's quiet, they need to buy. When the market's up a little bit, they need to buy more. When the market's up significantly, they need to buy more. So there are charts that kind of show as realized volatility, which just means movement. It's a fancy word for how much is the market moving. As it moves less and less, and we have seen this market absolutely kind of crawl to a stop from a back and forth standpoint. That doesn't mean we haven't gone down from 5,900 to 6,200 or whatever it is. But it means that it's very, very measured and steady and very few dips in between. And that means realized movement compresses. And that means these funds say, oh, got to buy some more. And so it will continue to be so until things do somehow, we get that macro event, whatever it is that you're going to talk about potentially could happen. And then the snowball can start going down the hill again. But until that happens, it's going to be the same old, same old. And like you said, that just makes life awfully difficult for the bears.
Join Samantha and Hans at the next Macro to Micro Options Power Hour held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here and subscribe to LaDucTrading YouTube channel for more content.